What's up, guys? Welcome back to the channel where transparency meets trading. If you're new here, my name is Tiana, and my goal is to share my true and transparent day trading journey. And for this video, we're going to be talking about and breaking down the trade that I took last week during NFP. For this trade, I made about $307. And I know for some of you guys, you may be like, girl, that's not a lot of money. But let's be real. For someone who just started trading live in the markets only a year and a half ago, that's good money. That's something that can pay the rent. That's something that can pay the light bill. That's something that could pay the car note, whatever your prerogative is. And like I said, my goal is to share my authentic journey. I'm not here to show the fluff. I'm not here to show the limbos. I'm just here to show you guys what it looks like when a person who is still working a 9 to 5 job can be successful at day trading. But first, let's talk about NFP because I know not everyone is aware of what it actually is. NFP is known as non-farm payroll, which is basically a U.S. economic indicator or news event that's released the first Friday of every single month. This is a report that measures the change in the number of employees, excluding farm workers, that has a very high impact on the financial markets. More specifically, it heavily influences the US dollar, which affects a lot of currency pairs such as Euro USD, the British pound versus USD, or USD CAD. And the reason that a lot of traders love to trade this news event is because typically it's very volatile and it has the ability to move the market with a lot of momentum into a certain direction. But the problem with this is, although you can make a lot of money from trading new NFP, a lot of new traders tend to get faked out and end up blowing their accounts. But something that I learned from seasoned traders, and it's a tip that I think could really help you guys, is that it's best to wait until after the news event has been released and volatility of the markets has settled down and price is starting to either reverse or give you a continuation pattern of that initial push. And so that's basically what we're going to see here today in this trade that I took. So let's get into the charts. All right, so for those of you guys that are new here, again, I say this in every video, do not get confused by all of the trend lines and the color coding that I do. What I do is I love to mark out structure so that way you guys can see exactly what it is that I'm looking at. I feel like it's one thing for me to tell you guys what I see, but it's another thing for me to show you guys. So I'm going to mark out structure as I go throughout this video. But for this trade, we're going to talk about three things. Number one, what is the story of the market? Number two, where did I get in? And number three, where did I get out? All right, so first, let's tell the story of the market by figuring out the direction of each time frame. And so we're going to start off with that 4-hour structure. And again, I'm using these trend lines just to mark out the structure so you guys can see it. And I'm going to do this in a purple. So as you can see, I have this 4-hour uptrend. And then I also have divergence as well. And so again, for guys that do not know, divergence is basically where price is going in an uptrend and doing one thing on the actual chart, while on the RSI, it's going in the opposite direction. And this is basically signaling that price is eventually about to reverse on that time frame. So right here, we're going to write in this box that 4-hour trend is now going in an uptrend. All right, so let's go down to our 1 hour. All right. And also, if you guys see me click on the 4-hour on the chart, but I'm marking up the 1 hour, it's because I like to mark up a certain time frame using the previous time frame. So for example, I'll get on the daily time frame in order to mark up 4-hour structure. I'll get on the 4-hour time frame in order to mark up 1-hour structure and so forth. I just found that this kind of works for me a little bit better with seeing certain things. So again, right here, we can see that price for 1 hour, I'm going to put 1 hour in blue, is going in an uptrend. You can see you have that impulse up, a pullback, impulse up, a pullback, and then an impulse up when price gapped a little bit. And then we have this large impulse down. And so something that I want you to notice right here, again, we're telling the market of the story, is right here, price ended up breaking that 1-hour structure, which means that price was initially going in an uptrend, but it broke this previous higher low in order to go to the downside. So we're going to put break of 1-hour structure. So because we have that break of 1-hour structure, we can now put in our structure box that price is currently downtrending on the 1-hour time frame or downtrend. And so something that I also want you guys to point out is Another thing that I was looking at with telling the story of the market is that not only did price break this structure right here, we had price come down, break this trend line, and retest it as well. So I'm going to make this trend line a little bit smaller. So this is a 1 hour trend line. You can see price broke it right here. And it came to retest it at this point. We're going to put that in blue. All right. And so this is the story of the 1 hour structure. Again, we're going to continue going down into 30-minute structure. All right. So we have this 1 hour structure continuing right here. And then next, this is making up that next impulse down for 1 hour structure. But instead of marking it, I just wanted to show you guys it. And I'm not going to put it right there so you guys can see the 30-minute structure that I'm about to mark up, which is going to be in orange. So this is my 30-minute structure that's going in a downtrend. But I'm going to leave off this little impulse down right here. So we have that price is now going in a downtrend for 30-minute structure. All right, so what I just did is basically mark out my structure so that I can tell the story of the market and see which way that price is trending. I only take trades that are going in the direction of 30-minute structure. So we already said that that 4 hour structure was going in an uptrend. Now we had a break of this 1 hour structure right here in this area that now indicates to us that price is going in a downtrend on the 1 hour time frame. Not only is it going on a downtrend, but we had a break and retest of this trend line, which also indicates that price is about to continue pushing downward. And so then when we marked up this 30-minute structure, we can see that 30-minute structure is also going in a downtrend. So we have three different things that is telling me price is going in a downtrend. So for this reason, I knew that I was looking for sales on 30-minute structure. All right, so now that we know the story of the market and we have marked out a structure to see which way the market is trending, let's talk about the second thing that I mentioned, where we're entering into the market. So we know that we're looking for a sell, and we also know that we have NFP coming up. So let's talk about the confluences that I had in order to enter for a sell and how NFP affected that. So let's go down to this 15-minute structure. So as you can see, again, NFP was released at about 7:30. Right here, and I'm in Central Standard Time. So you can see that when it was released, we had an initial very bearish candle that pushed down, and then a little bit later, we had price come back up and retest this area before continuing to push down. And so this is the thing that I was talking about earlier. A lot of traders, they like to get in, especially new traders, on the initial push during NFP. And the problem with this is today it might have worked if you took a sell, but most times NFP likes to spike and it can fake you out. So let's just say that it decided to push up a little bit before it started pushing down. And this is where a lot of people get their accounts blown. And so for me personally, like I said, what I've learned from seasoned traders, instead of trading that initial push down, wait for the pullback or the correction before it continues to go in that direction, which is exactly what I did. So again, we're going to talk about all of the confluences that led into why I took the trade and what my entry was on the trade. So the first thing that we have is, let's talk about this initial push down. I already knew that price was now going to continue that downtrend from the pullback on the 1 hour. And so once price pushed down from the NFP and broke this low right here, I knew that we had a downtrending 30-minute structure. So that's number one. 30-minute structure was confirmed that it's in a downtrend. Number two, my second confluence was that right here, you can see we have this trend line based off this point here, and this wick candle here. We have a trend line where price broke this trend line and came back to retest it. So this was our second confluence. Price broke this trend line, which is what I'm going to put in red, and came back to retest it in blue. All right. And so if you go back to the 30-minute, you can also kind of see how much price was breaking out on this trend line. You can see it on a 15-minute structure, but I love to go to other higher time frames just to see if price is truly wicking out. And so that was my third confluence. Wick exhaustion is a very good indicator that price is about to reverse in the opposite direction. So those are the three confluences that I had to go into this trade. Number one, a confirmation that 30-minute structure was in the downtrend. Number two, we had price break and retest this trend line. And number three, wick exhaustion. And as we discussed before that we had as well, we knew that NFP came out, which gave this initial bearish push down. And then we waited for that pullback of NFP, which was confirmed by the break and retest of this trend line for the continue to push down. And so something else that happened, if you just want to add something on top of that, is that price also respected this initial trend line that it was testing for that 30-minute structure. All right, and so let me add the position that I had on there. I had my stop level at 25 pips, which is about right there. I wanted it above this previous wick candle because I did let it wick out before I got into the trade. And I got out about down here. So now let's talk about number three, which is where do I exit the trade? How do I know where to exit? All right, so let's go down into the 15-minute structure. Now, number one, the thing that I use in order to determine where I'm going to exit the market is fib levels. And so you can see right here on this 30-minute structure, we had price come down to the 0.0% and it pulled back to the 61.80%. And typically, when price pulls back that far, we are expecting it to go to TP level 2, which is the negative 61.80%. But because this is a Friday, again, I've been trading for a little while, and the more experience you get in the markets, the more you start to notice certain patterns. Because it's a Friday and it's also an NFP day, price is most likely not gonna hit that TP2 only because at the time that I got out of the trade, it was about 1 to 12 in the after 12 to 1 in the afternoon, and the market closes around 3 to 4 my time. At that point, I'm good with the profits that I got. So instead of trying to wait till it hit this TP2, once price hit my TP1, that's when I got out. And so something that I do want to show you guys, let's go down to the 5-minute. So initially, when price pulled down here, I didn't get out, and then price ended up pulling back. Now, a lot of people, what would happen is if they saw price pull back this dramatically, they would have gotten out the trade here because they would have been afraid that price is going to start pulling back all the way up into their stop loss, and then they lost all the money that they made. But something that you can start implementing is your trading is to go down into those lower time frames and see what price is doing. And what I mean by that is you can see right here on this 5-minute structure, yes, price pulled back for a bit, but you can clearly see that it is a break. Let me put that in red. And a retest of a 5-minute trend line. And so because I went down into the 5-minute time frame and I saw that this was a break and retest of the trend line, I had enough confidence to continue to hold the trade. And so once the trade pushed back down, this is the area that I got out. Another thing to note is when you see price clearly start wicking out at an area, clearly start showing some wick exhaustion, and it's a previous tested area of support or a previous tested area of resistance, but in this case support, go ahead and get out. Some people, they like to hold trades until their TP1 or TP2 hits, and price easily could reverse on them. But the thing that separates successful and great traders from your average traders is they pay attention to what the market tells them, and they know how to adjust their plan as needed. Again, like I said, not only is it about 1:30 in the afternoon and the market closed about 3 o'clock in the afternoon. That was one thing. And also, like I said, price started to wick at this point. So there was no point in me holding the trade until this second TP. I just got out around the first one. So with that being said, this is the trade that I took during NFP. I hope that this helped you guys out a lot, especially with explaining. If you have any questions about anything that I just went over, please comment down below and let me know if I can answer anything. But again, like always, I'm going to show you guys my broker in which I made the trade on. So as you can see right here in my previous video, if you've watched it, you know that I had a very long winning streak. And then I started to take some trades that did not go with my trading plan and I put myself in drawdown. But that's okay because I'm showing you guys that even though you go into drawdown, it is a very normal thing. And with discipline, you can build and pull yourself back up out of drawdown. But anyways, you can see that on February 7th, which was the Friday of NFP, I made $307 on this trade. And so these are two trades that I took this week. NFP was last week, and so I'll be going over these trades in a separate video for you guys. But again, this is the trade that I took. That is essentially all for this video. Please let me know if there's something else that you guys want me to go over, if you learned something from this video, or if you trade NFP. Whatever that may be and how it works out for you. But all right, that's it. Tiana's out.